Before we map our asset groups in nettTracker to the different chart of account categories we use in our accounting software, let's take a look at how our chart of account categories may be set up. Let's imagine we're monitoring two types of assets, motor vehicles and computer expenses. On the left, we've got a short, simple setup comprising of 5 chart of account codes. We have computer equipment, motor vehicles, and accumulated depreciation in the balance sheet. And then we have depreciation and loss and gain on the disposal of fixed assets in the profit and loss. On the right, we have a more detailed extended setup that comprises of 16 chart of account codes. For each of the different asset groups in the balance sheet, we've got accumulated costs, additions in the year, disposals in the year. We've also got accumulated depreciation, depreciation adjusted in the year, and depreciation adjusted on disposals. Within the profit and loss, we're using a different chart of account code for each type of asset. So depreciation, computer equipment, depreciation, motor vehicles, and again, 2 categories for loss and gain on the disposal of fixed assets. However, although you break down your balance sheet in more detail, if you wished, you might still use just one depreciation account and one loss gain on disposals in your profit and loss. If you've never maintained a fixed asset register before, there could be the temptation to create a different chart of account category for each asset that you own. If a business owned 25 cars and used the chart of account category for each, the balance sheet report is likely to run over multiple pages when it should not need to. Only one balance sheet category for motor vehicles is required, plus depreciation, because all of your details are held in the fixed asset register. Now that we understand some of the categories we might be using in our accounting software, let's look at mapping our balance sheet accounts in our accounting software to our asset groups back in nettTracker. Using the Asset Register menu, I'm going to select the option Asset Groups and Mappings. We've already created our asset groups, fixtures and fittings and motor vehicles, but we have not yet mapped these to the chart of account categories used in our accounting software. Towards the top of this page, I'm going to use the option Manage Account Mappings. Account mappings are broken down into 3 sections. The first 2 are mandatory and the third is optional. Let's look at step 1 first of all. For each of the 2 asset groups that are in place, I need to select which chart of account code is used to post new asset purchases to, which balance sheet account is used to post our depreciation to, and which profit and loss account is also used for our depreciation. Starting with the first for additions, fixtures and fittings, I can start to search for the account that I use, fixtures and fittings, and I can do the same for motor vehicles, the depreciation account. There is only one. I'm going to use the same balance sheet account for both. If you use a separate one, that's absolutely fine. And then finally in section 1, we need to select the profit and loss account used for depreciation. And again, I just have depreciation expense, which I'm using for both. So now I can move on to section 2. For my disposals. So this is going to affect how my accounts are adjusted with journals each time that I dispose of an asset. And it could be that I'm using the exact same accounts that I used in step 1. So fixtures and fittings, motor vehicles, depreciation. Now I could use also the depreciation account in the profit and loss, or if I've got a loss or gain, a disposal account in the profit and loss, I can select that. If I don't actually have an account for gains and losses, but I would like to use one moving forward, then I can let nettTracker create one for me, and that's what I'm going to do here. I'm going to let nettTracker create a new expense account for me, and that's going to be actually one for each of those asset types. Now, if you do find that you've created the two accounts and you only need one, then you can go back and can change the name that is given in your accounting software and remap it again afterwards. So I'll move on to the third section by clicking next. The third section is optional and we only need to use it if the extended detailed chart of accounts setup is used in our accounting software. For example, if I'm using different accounts for the additions in year, the disposals in year, for the depreciation in year, any adjustments to depreciation that happens during the year, separate to those accounts that hold my accumulated balances, then I will need year-end journals. And what will happen is that at the end of a financial year, all of those movements during the year, my additions, my depreciations, are adjusted to those accounts that hold the accumulated balances. This is for a company with a simple setup, so I'm going to tick the box. Transactions entered during the year are posted to accounts that contain accumulated balances. Year-end journals are not required. And then I will click Finish and Save. We can now see that our asset groups are fully mapped to our chart of account categories. We may see a warning at the top to say that we've not managed completely, and that's just because I've not mapped accounts for year-end journals. I don't need them, it's not mandatory. If I had mapped account for year-end journals, then the year-end accounts would show in orange below the green section.